All right, ladies and gentlemen, rates are up, house prices are up, the housing market's a dumpster fire. What's a home buyer to do? You're going to find out next with our mortgage expert, Chris Myers, coming up next on Cliff's Notes.
Real estate agents, are you struggling with the day-to-day grind, dialing for dollars, putting in hours of floor time with little to show for it? Are you looking for tips, tricks, and tactics to accelerate your career as an agent that will have you closing more homes, working with more clients, and earning more money than ever before? Hi, my name's Cliff Freeman, and I've spent the past 2 decades of my real estate career running one of the top brokerages in DFW and personally coaching over 1,000 high-performing real estate professionals across North America. I created this podcast to share the strategies and tactics you need to explode your real estate business. I guarantee it.
We guarantee it. Welcome back to the show. And today, man, this is a Hall of Famer in progress right now. You know that, right?
I do know
This is going to be the Rider Downer show. If you're out there, get that fresh pen and that clean 14x8 yellow legal pad. You're going to need it to write down all the great nuggets you're going to get today. Well, C3, my partner in crime, what in the heck is going on with the housing market?
Apparently, it's on fire.
Dumpster fire.
Dumpster fire.
Right?
Yeah.
Yeah.
A lot of cool things. I think positive, most definitely, rather than negative.
Positive opportunities.
Yes,
You see opportunity.
I'm optimistic, yes.
You're like your dad. You sleep with sunglasses on, right? Just in
At
case
night,
the sun
yeah.
comes up in the middle of the night. Well, I have to agree with you. I think it's a great time, but I think, our audience of real estate agents is really, a lot of you guys are struggling right now, not knowing how to handle this with your clients. And you're very fortunate today because we happen to have a longtime expert on the finance side of our business who's also well-versed in real estate. I want to introduce from Stearns Lending, meet Chris Myers. Chris, welcome to Cliff's Notes.
It's
Great to have you here.
14x8 pad, huh?
A legal pad.
We're going straight
We're
past
going
11
deep.
and a half.
Yes.
Yeah, 8.5 by 11. Okay.
We're going to go deep here. And I think what we probably should start out with is just to kind of frame what we're going to talk about today. Let's look at some graphs here. Trelvis, by the way, sir, how are you today?
I am great. How about yourself?
Man, I'm just bumping up right next to perfect now that I'm here in your presence. Well, let's see. What do we got here? Chris, that looks like something to do with a yield curve.
Yeah, the 10-year spread is, if you've ever ridden the Texas Giant, that's about what it looks like on a graph.
Right.
So,
if you're an agent and you haven't seen this or you're not familiar with it, this is a great tool to help you understand the direction of the overall economy. And I want to start with that at a 30,000 foot level because I think it's important to understand the dynamics of what's going on. We've got a little bit of an unprecedented situation. Affordability has just blown by everybody. House prices are up 50% in this market in the last 24 months. Mortgage rates are up 300 basis points in the last 6.5 months. And now the Federal Reserve is raising interest rates with the idea that they can pump the brakes on the housing economy. Unfortunately, as we all know, when the Fed raises, that does a lot of things. Let's back up to the other one, Trelvis, real quick here. This one, if you will look, ladies and gentlemen, you'll see some vertical gray bars in here that represent every recession in the last, roughly 50 years. And you can see that it was preceded by a downward drop in that curve, that spiky looking curve to the right. What that curve is telling us is when it drops below the red line, that is when the yield curve, which is what is on the left, inverts. Now, normally a healthy yield curve will have a gradual slope and be higher in the right side on the long end of the curve and lower on the left side or the short end. Now, when the Fed gets in here and plays their little game with the Fed funds rate, that happens to be a short-term interest rate. And they have continued to move those. The last time, about a week and a half ago or last week, was 75 basis points. And they are committed to continuing to raising that until they see some relief in the housing market. Now, the challenge, the tightrope that they're on, that they're walking right now, is if they don't raise rates fast enough, they can't stop inflation. And if they raise rates too fast, then they run the real possibility of pushing the economy into a recession. So agents, I'm going to ask you to keep an eye on the yield curve. You've heard of this possibly before, but if you see and hear talk about the yield curve inverting, that is a predictor, a very accurate predictor of the possibility of a recession in the U.S. Now, we can talk in detail a little bit about what that means, but let's go ahead and go to the next slide, Trellis, if we could. This slide represents the percentage of institutional purchases of homes in the different states. And you'll notice that Texas, my friends, is deep red, okay? Now, what does that mean? Well, what it means is that in the last year, almost a third of all homes purchased in the Lone Star State were purchased by other than individual buyers. Now, you just might speculate who those could be. Some are mom and pop LLCs looking for short-term rentals, Airbnb type stuff. But unfortunately, Wall Street decided to stick its stinky finger into the real estate business once again, and now has sort of cornered the market a little bit in the lower price, those entry-level homes. They've essentially squeezed out the first-time home buyer. They're coming in with a lot of cash, and they're chasing yield. At least they were until, yes, you guessed right, prices started to level off. And now, depending on what happens with the economy, we could certainly see another dumpster fire if these institutions decide they need to unload quickly. They think they're selling shares of stock, but the housing market is illiquid, and it's going to have a huge impact on things if they let them go. Next slide, please, sir. Now we're talking. This is the Case-Shiller Home Price Index. And my friends, in the last year, home prices are up about 23%, nearly 50% in the last 24 months in our market. This is unprecedented, never happened before. And what that's done is create a double whammy. Let's go to the next slide. Travis, please, sir. What we see here are interest rates on a 30-year fixed rate mortgage, and they have gone from roughly 3% to now upwards of 6%. And Chris, you and I talked at lunch. We can go back now to the live shot here, Travis, thank you. We talked about this during lunch, and for somebody that was shopping for a house in December with a $400,000 loan amount, their buying power on their loan has been cut to $316,000. What's it like in the field? You're in the trenches, man. You're seeing these people. Some of them are shopping. They've been looking for a long time.
Well,
what's going on?
The ones that are dying are the ones that are having homes built, because we've had people that have started the process of building back in August of last year, and the house isn't built, it's not finished, it hasn't had an appraisal done. You can't lock in a rate at that point. Well, remember when the lumber shortage happened? There were people getting basically kicked out of their new builds because, we had to just buy $100,000 worth of lumber. Well, it wasn't going to be $100,000 before, so now I'm priced out of the house. Mm-hmm. So you had that problem. Well, then when we were qualifying people back in August, September, October of last year, rates were 3.5%, 4%, just depending on credit, stuff like that. But now, you get to the point where your house is 60, 90 days out, and now you're at 6%. Well, your debt to income at that time when we qualified you was 39, 40, 41%. Well, now at a 6% rate or a 6.25%, whatever it is, now you may be priced out on your debt to income. The pricing went up, The rate went up. Your APR is definitely going to go up, unless you want to buy that rate down, which you can. I don't know if I would recommend it right now, but with all that stuff happening, that's exactly what's going on, is people are being priced out of their houses.
Well, in fact, the builders are actually requiring at Roofline that you sell the house that you're currently in. They want to make sure you're liquid and don't have trouble selling the house that you're in. And therefore, some people have to go homeless for a period of time. Those people are really going to get the double whammy, because being out of the market for 3 months with this incredible appreciation is like missing out on a bull run in the stock market, right?
Yeah.
So that's really tough. So what are you doing now with people? You work primarily with resales, right? With those folks.
Not doing a whole lot of new builds right now.
What are you seeing with people who were pre-approved and have just delayed the process? What's happening?
Well, you get people who they come in at a razor thin margin. Most people, when they're buying a house, they don't understand the fact that you have to have assets, you have to have income, things like that, to be able to qualify. But it's not just that. You have to be able to make the down payment. You have to be able to pay the closing costs. Sometimes the seller will help pay the closing costs. I'm not saying they'll do that all the time, but especially now. But they'll price themselves, right out of it because of their debt to income. With people who have waited, I've told people this entire time, if we get a contract, lock that rate. Because, and I've made this analogy before, and I think I told you guys about this. I know I've told you. And feel free to speak up. The gas prices, if you watch gas prices, rates will follow that.
I remember you telling me about that.
They really do.
Yeah.
But it's not tied to any index as far as gas or housing.
Right.
But if you watch gas go up, rates go up. If gas comes back down a little bit, rates will come back down a little bit. Gas came down about, 15 cents about a week ago and went right back up. But rates came down just a little bit, right under 6%. Now they're right back at 6%. So, if you're driving by a gas station, I'm not counting Sam's because they discount everything. But if you drive by a gas station says, hey, prices have gone up a dime in the last 24 hours, what's your rate? I will tell people, anybody buying a house, anybody refinancing a house, and there's still refinances out there to be had. There are, because you can get a lot of equity out of your house, just depending on how much, the appraiser comes back with the value of your house. But if you're buying a house, don't float your rate. I would not recommend floating your rate.
Yeah.
People used to do that a couple of years ago. They're like, well, I'm going to see if it gets down to 3. I got my brother a VA loan 3 years ago at 2.25 for a 30-year fixed. I mean, that's unheard of. 2.25. Today, that same house on a VA is 5.25, 5.5, somewhere in there. Just depends on what you want to do.
So that's a lot, for just to put this in perspective. Say, for example, that you had a $300,000 loan you were looking at in December. That payment at that rate would have been about $1,256. Today, the same loan amount has a payment of $1,800. That's how much it's increased. In fact, what we know from experience with our group is that for every 1% that rates go up at this level, buyers lose about 10% of their buying power.
Right.
They sure
they
do. Yeah.
And what you thought you would qualify for in August, September, October of last year, it's not the same. No.
Right.
Absolutely not.
Yeah. There's a saying going around, you've probably seen it on social media, that goes, marry the house and date the rate. What is that? What are they talking about?
Well, it means float it along, see how it goes until you decide to get into it, until you decide to commit to it.
Yeah.
Don't do that. Don't do that anymore.
Well, you're talking about beforehand.
Right.
Yeah.
Right.
What about this? What about, hey, you know what? I'm going to buy the house, but in 2 year rates are going to be down. I'll just refinance, but I need to go ahead and get into a house.
You can do that.
So that's what he means by dating the rate, I think.
And we've had a lot of people who've done that. They'll say, look, I really want this house. This house is very important to me. And your agents, who are amazing, by the way, They go show the houses, they get these people the offers, they get into the house, hey, here's the contract, we want to get this house. Okay, but the rate is going to be this. I don't care. There's been some stories come out in the last 24 hours, 48 hours, where some people in the industry think that rates are going to come back down probably in 24, 36 months.
It could be very
It's a
very possible.
possibility.
Yeah.
But then again, we may go to 12%. I think people forget what it was like in the mid 80s, but if you get into a house and you're at 6%, you can always come back. If rates come back down, you can always come back and refinance.
For sure.
And
Yeah.
it's a little cheaper to do that, and you can drop your payments. You can do the same thing if you have PMI, unless it's an FHA. But if you have a loan where you put 15% down, you're at 85% loan to value, and you're at 6%, you're going to have mortgage insurance. Well, that mortgage insurance will drop off once you get below 80%, and you can refinance it once you get below 80%. You're going to save a lot of money on the rate and on the mortgage insurance.
Right.
So
and it's
kind of
true,
a
isn't
double
it?
whammy.
Yeah. Most people, in the time that they own a home, they're going to have 3, 4, 5, 6, maybe 6 different loans on it.
Right.
From refinancing. I mean, we saw that, back when I got in the mortgage business in the early 2000s, we saw rates start to come down from 8 down to 6 and 5 and so forth. And, we saw a huge refinance boom. Rates have been so low that, refinances have been, probably half or more of the entire mortgage business.
Oh, it was more than that.
Yeah,
It was more than that. Where,
Yeah.
the company that I was at before I was at Success, I ran the consumer direct division for a long time, and then I was producing branch manager. And I would say probably 90% of everything we were doing was refinances. But you have to be able to pivot. If you're in this business, you have to be able to pivot from refinances or cash outs or streamline. This one's completely gone off the table, is FHA streamlines and VA IRRRLs,
Right.
interest rate reduction loan. But you have to be able to pivot from a refinance to a purchase. The problem is in this business is there's too many people, and I'm not naming anybody in particular, but there's been too many people out there who just relied on, I'm just going to refinance this. I'm going to do all my friends, all my families. I'm going to get these phone calls off the internet, Lending Tree, all these places, and those are drying up. If you don't pivot with the market, you're going to be left behind, and you're seeing that with a bunch of places laying folks off, unfortunately, because they're just not able to pivot.
Exactly. Let's get a word out here to our audience of real estate agents. Some of them are newer. What advice would you give a real estate agent who's interviewing lenders?
You want to check on a couple of things. You want to check on the speed of a closing. You want to check on how fast they can get you a prequalification or a preapproval. With Success, we have all the online tools and stuff. If somebody sends me somebody who they think is qualified and I get on the phone with them, I can get them pre-qualified in about 7 minutes. We'll go through everything, take a look at the credit, get their liabilities, income, assets, and we'll run it through an automated underwriter. Actually, we can do it in probably 4, So we can get a pre-qualification that way. A pre-approval requires the borrower sending in income docs, asset docs, things like that. We get it in front of an underwriter. So you want to check out that. How fast can they do that? How fast can they get your stuff closed? How fast are appraisals being done? A lot of, you guys know this. In the last 2 years, appraisals were just crawling because appraisers had their. You could just throw out some cards and go, okay, I'm going to take this one. I'm going to take this one. Nah, that one's not worth my time. And then they'll come back and they'll say, well, it's going to be $800, $900 to do it. But then they take 6 weeks to get an appraisal back.
Sure. Yeah.
It's insane.
Yeah.
Well, now, I in personal experience, I just did a loan in Georgia, and we got the appraisal done in 2 days. So I was thrilled with this one.
That's awesome.
Yeah. So those are the questions that you want to ask when you're talking to different lenders. If you and what are your systems like? At Success, we have systems that are second to none. We use Blue Sage. We use Optimal Blue for our pricing. We have a system, and you guys know this with eXp World in Verbella. It's a virtual world where agents and loan officers and title people, insurance, you name it, are all in this world, in the virtual world. And it's funny because when you go into this world, if you've never been in it, anybody in the business with eXp Realty or lenders, if you go into this, it's kind of like looking at The Walking Dead. Because you walk into this room and there's all these avatars just breathing and doing nothing. You know, there's no activity unless people are actually walking around. But when you come in, there's a booth. We have a booth in the eXp world for success. And I'm usually in there from 11 a.m. to 4 p.m. in the afternoon, answering questions, doing whatever you need. And, you know, that's one of the things that we have for agents. If they have a question for a lender, for us, they can come right in there. You know, all the agents have my phone number, have my email. They can get in touch with me anytime. They can get in touch with any of us anytime.
Yeah.
You know, so that's one of those are some of the things that I would ask a lender: speed, quality, how fast can you get this done? Everybody, and I'm just going to say this: rates don't matter. Okay. Too many times people will say, "Oh yeah, well, what's your rate?" I'll get phone calls from people who will just call me and say, "Hey, what's your rate? What do you want?"
Right.
I want 3%. Okay, it's going to cost you 5 points.
Sure.
Well, that's outrageous. Well, you said give me a rate. I mean, it's like a doctor walking into a hospital room going, "Do you need surgery?" You know, I mean, you're not going to do that. You're not going to walk into a doctor's office and go, "What's wrong with me?" Well, I have to examine you first. That's what you have to do. You have to interview the lender, and then the lender has to interview the client. You know, and we work so hand in hand with eXp and your group that they ask a lot of the questions that I'm going to ask the borrower up front. You know, so when I get sent some information on the borrower, I'm ready to call them or send them an email and say, "Hey, this is what I know about what you're wanting to do. What can I do to help?"
Right.
You
Right.
know?
Yeah.
Speed is the biggest thing.
Yeah.
And the other thing, and I'll tell you this, and I don't mean to keep rambling. The other thing is communication. Are you going to be able to communicate with your lender?
Number one problem in the real estate.
That is the
business.
biggest problem, and I don't know what you're pointing at me for.
I'm
do I?
pointing at you. No, you over communicate.
Okay, thank
you.
you.
Do very well.
See, that's
And you're
because I
easy to
talk a
reach.
lot.
Yeah.
But communication is the biggest thing. Too many people, too many times in our business, and I've seen this with every company that I've been with, there's always been a couple of people. They do the Ron Popeil Showtime Grill, set it and forget it. Remember that?
Sure.
You stick a turkey in that little oven, you spin the thing, and you walk away for 2 hours. When you come back, it's perfect. It's got beautiful gypsums. Okay, whatever. But if you hand me somebody that you've already communicated to and you've already made an established relationship with, I'm going to continue that relationship with them and with the borrower or with the real estate agent. Leaving the real estate agent out of a transaction is stupid.
Yeah.
Okay, I know that's not a nice word. Stupid is as stupid does. Don't leave the real estate agent out. If you're going to email your borrower, email the real estate agent. Communicate with the real estate agent. 9 times out of 10, if you can't get your borrower to send you the docs that you need, bet your real estate agent
Oh,
can.
for sure. Yeah.
You know, so you tag team it. You know, I know a little bit about tag teams. So
You do, as a
I
matter
do.
of fact.
I do.
Wrestler, yeah.
We'll talk about that in a little bit here.
But communication is key. You want to be able to. I've told everybody that I've ever talked to in the Cliff Freeman Group and eXp, everybody in the system that we use, if you need me, call me. Okay, if it's 8 o'clock at night, I'll pick up my phone. If I don't, I'll call you right back. Okay, don't call me at 2 a.m. I'm sleeping. But if you have a milestone on a file, your loan has been approved, tell the agent. Your loan is in underwriting, tell the agent. Hey, your loan's clear to close, tell the agent. Don't let them find out by the borrower or have them keep calling you. The last thing you want is for a real estate agent to keep calling you going, "Hey, I'm just checking in on this file. I haven't heard it from anybody in about a week."
Right.
That's not on the processor.
But it happens. Let me tell you, I have a lending background. I've been in real estate a long time. Sometimes clients insist on using a big money center bank and just banks where the LO is in California, the processing department's in Arizona, the closing department's in North Dakota. Once that file gets intaked, I mean, you have no idea who to talk to, where to go, or anything like that. It is such a mess, and I've seen people literally with the moving van out in the parking lot of the title company, friends, and the loan blow up, and there's nobody at closing or nobody around the corner in your area to go look at in the eyeballs and say what's going on here. In fact, they have no clue. So, but you're here, you're
Texas.
local,
Yeah,
and that is huge. All right, let's talk a minute about the difference. Everybody should know the difference between a pre-qualification and a pre-approval. And I want to know what your strategy is to help agents get their deals to the top of the pile.
A pre-qualification, like I said, I can do in 4 to 7 minutes. All that is just filling out the information, and it's a verbal check of your income, your assets, things like that. There's a system in place in our application where you can actually go in and you can have a virtual, what's the word I'm looking for your assets. They can check your assets through your bank.
Sure.
And they can approve them right there. You don't have
Wow.
to send in bank statements. It works about 75% of the time. The other 25, you're going to need to send bank statements. But if I go in and I do the verbal income, assets, hey, we took a look at your credit, here's your liabilities, and your debt to income lines up, we can run it through an automated underwriting system, either through Fannie Mae or Freddie Mac. USDA takes a little while longer because you have to go through the government underwriting system, or GUS. So that takes about, just depends on how busy the processor is. I got a GUS run yesterday in an hour. So it takes a little bit longer. That's what a pre-qualification does. Pre-qualification is based on your verbal information.
Right.
And we'll kind of grill them a little bit. Is your income, is this your gross? Is this your net? Your assets, do you have checking, savings? If you have a 401k that you're pulling money out of, are you able to take a loan against your 401k? We're going to need all that. And that's the pre-qualification. A pre-approval is getting that information, getting pay stubs, getting W-2s, getting bank statements,
Verifying
401ks, verifying, sending it to a processor or an underwriter. And we have one of the greatest underwriters on the planet at Success Lending. Okay, April, how you doing? But she's amazing, and she gets this stuff done fast.
Right.
But get a pre-approval means that the underwriter has verified it, checked it, looked it over, and said this debt to income is good, this loan to value is good. They have the income for the down payment. They have the income for the estimated closing costs. Another thing to remember, all estimated closing costs are just that. They're estimated.
Estimates, yeah.
Okay? People will get a loan estimate and they'll go, well, this is outrageous. That's usually worst case, But there are title fees. There are lender fees. Lender fees are small with Success. But then you have to remember that you have to set up an escrow account. If you're not doing 80% or a 20% down payment, you have to escrow your taxes and your insurance. And in Texas, taxes are a bear.
Yes.
So, and it all depends on whether or not you can get the seller to prorate the taxes and pay for the year up to this point, or if you have to end up paying them for the year. And taxes in Texas are, see, I keep wanting to say Texas and taxes and do that backwards.
Paid in arrears.
Right.
Yeah.
They're paid in arrears, but they're due January 31st. A lot of places will say, no, they're due October 31st. No, they're due January 31st. That's the last day you can possibly do it. So, they forget that they have to have the money to pay the escrows, to pay the closing costs, and to pay the down payment.
Yeah.
So when people come to us and say, well, I've got $9,000 and I want to put $8,000 down. Okay. Now you can't get a gift. You can get a gift from a family member if you so desire. I'm going to tell people this right now. If you have $8,000 in a mattress shoved under your bed, take it out, put it in a bank, because it has to be seasoned for 60 days.
Yep.
Too many people I've talked to in the last 3 months say, I don't trust banks. So I've got $10,000 worth of cash in a coffee can in my freezer. Take it out, put it in a bank.
Yes.
If you want to use it, we're going
That's
to need
right.
it.
Yep.
So make sure you're doing that.
And again, that's
Definitely.
60 days.
Yep.
Yeah. Seasoning. They call it seasoning. It just means that it's been in your bank for at least
Marinating. if you will.
Yes,
marinating.
yeah.
Right.
So, yeah,
Exactly.
yeah.
So you mentioned closing costs. So there are really two kinds. There are expenses, and then there are what we call prepaids. What are the prepaids? What do you have to prepay?
The prepaids are the escrows.
Okay. So the insurance, you're going to prepay that.
If you buy a house, okay, and let's say your insurance is $2,000 a year, you can pay the insurance company $2,000 up front, or you can pay it at closing, whichever you prefer. That is a prepaid.
Right, but it has to be done.
It has to be done.
You can't wait for the hurricane to come and then buy the insurance.
Right.
Yeah, right. Yeah.
That's not how that works.
I had a car wreck. Progressive, how much is it going to cost me?
Yeah, how much is my insurance going to be? I just had a
can't do
wreck.
that. Yeah.
Right.
So yeah, the prepaids are taxes, interest, or insurance. There is prepaid interest as well.
sure. Yeah, yeah.
Depends on what
Yeah.
day of the month you close.
Right.
Because if you close on the 25th, you have interest that you have to pay from the 25th to the end of the month.
Right.
Because interest is paid in arrears as well.
Yeah.
So you have to make sure that you have that money for the closing costs and the prepaids.
Right, right.
there's
Wow.
that.
That's very interesting. I hope you guys are filling up that notepad here. So in terms of how should agents be communicating right now with their clients? What should they be telling them about interest rates?
Get it while it's hot.
Okay.
Get it sooner than later. We don't know. If I knew what was going to happen with interest rates, I'd be standing on a stage in Vegas with a crystal ball, making a hell of a lot more than the Blue Man Group does right now. I just would. Nobody knows what rates are really going to do. I mean,
Right.
a year ago, people in this industry and people that I trust in this industry were saying, "Oh, rates are going to keep on a downward turn, and they're going to stay static for about another 36 months." Well, things have happened. We won't get all political, but things have happened, and that is not the case. In the last 6 months, they've gone,
Right.
Will they keep going that way? I don't know. They've leveled off in the last couple of weeks. They've leveled at about 6. 15 years are running around 5.5, 5.25, a little bit less. ARM notes, not much different than a 30-year right now, believe it or not.
Which is unusual.
It is
Yeah,
unusual.
It is, yeah.
Usually you get a 5-year, which has a bigger break, 7-year, 10-year has a bigger break than most. Back in the early 2000s, we were selling 10-1 ARMs like they were just going out of style.
Sure, yeah.
But now, if you're communicating to your borrower and you're saying, okay, we're going to make this offer, once we get it, and we've already talked to them and said, this is what you can afford. If they take that offer, call me, send me that contract, fully executed, by the way, make sure everybody signs it, and lock it.
Yeah.
Lock it in.
And so what about for those consumers who are shopping for a mortgage that are just really want to be on top of it before they go house shopping? How important is it for them to seek professional guidance in this whole process?
There's a lot of places out there, and I'm not casting dispersions on anybody. That's my big word of the day. Dispersions. Write that one
SAT
down.
word.
That one's later. There are a lot of places that I hear that do mortgage qualifications. We want to get you qualified for a mortgage. Why call them and have them check your credit if they're not going to do the mortgage for you? They're going to make sure that you're ready to go. Okay, call us. We'll make sure you're ready to go, and if you are, we'll get you locked. We'll give you the interest rates of what the interest rates actually are.
Right.
So.
And you guys are on top of it. You see interest rate changes as much as 1% in a day.
Yeah, we've seen that.
And so you can sort of, see when that's coming. And if you need to get something locked, you can get it locked, much quicker.
It takes me 2 minutes to lock a loan.
2 minutes to lock a loan. Yeah. So, I mean, if you're out there and you're this is like trying to do a DIY kidney transplant, right? I don't recommend it.
No, it hurts. It really is painful.
Yeah.
I got $10,000 for it, but
the recovery is a lot longer.
Yeah, the scar is horrible. So.
Yeah. But it's the same thing if you're trying to do your own home transaction, your own mortgage and stuff, because, you've done a little bit of research and stuff. Don't do that. Find somebody like Chris who's got years. I know he doesn't look that old, but he's got years of experience in the mortgage business. And Chris, if someone wanted to reach out to you and contact you directly, what's the best way to reach you?
Email or my cell phone. My email is chris.myers, MYERS, @successlending.com. It's MYERS, not MEYERS, because too many people will put the E in there, and it's not. Just like the guy from Fox Sports. So,
yes.
Chris.Myers at Success Lending. My cell phone is 214-287-4044. Call me. If there's any way I can be of help, if I can get your clients taken care of, if you're a borrower and you're shopping, I will tell you this. If you're shopping for a loan, find the 1 or 2 lenders that you trust. Then pare it down from there. Don't have 5 or 6 lenders pull your credit, run applications, do everything like that. And the other thing, and just indulge me for just 1 second, if you get a loan working, if you lock a loan, with Success or anybody else, and your debt to income is say 41%, 42%, you're right there, don't go out and buy a Harley. Don't go buy a car. Don't go shopping for furniture. Don't have any credit inquiries during the process, because you'll have to explain those. And if you buy a couch for $3,000, there's a possibility that they're going to put that credit check and that liability on your credit. So the next time it gets checked right before you close, you did it to yourself, because now you don't qualify because your debt to income is too high for the program that we ran. So guess what? You either don't get the house or you start all over again.
That's right. And we actually have a 10 commandments of getting a mortgage loan. And if you'd like to get a copy of that, you can DM us. We'll put our contact information down in the notes, Chris, along with yours. Chris, man, I'm so excited to have you on the show today. And ladies and gentlemen, the sky is not falling.
Nope.
It's just a little cloudy out there. Things are going to be okay. There is no need to panic. I want to be real clear about that. But when you're going into this, you might want to really consult some professionals to help you, guide you through this. This is not for the timid, not for the weak at heart. A small mistake can cost you a significant financial loss if you're not careful here. So be sure you're careful, right?
Significant.
Significant, yes. That's another good word.
Tell us what's significant about that, Cliff.
It's just significant. You really should consult somebody that knows what they're doing, because it will cost you in the long run.
We've seen it happen. Blood
Yes.
on the carpet.
Yes, several
indeed.
times.
All
I
right.
want to make sure everybody's taken care of.
Good,
I want to make
always.
sure. My biggest thing, and I'll just close with this, I want to make sure you're happy. And I'm talking to real estate agents and I'm talking to buyers.
Yeah.
I want to make sure you're happy.
For sure. Yeah, you guys don't spend a ton of money on radio and TV like these other lenders do, because your business is based on referral.
Well, I work for Glenn Stearns.
Right,
So
exactly.
I don't really have to tell people a whole lot. I work for Glenn Stearns. You know, the undercover billionaire?
Yeah.
I work for the guy.
Right.
He's a great guy.
Yes,
I know him personally.
1,000%.
Yeah,
We just celebrated a little bit
Yeah.
with him in Orlando last 2 days ago, wasn't it?
Yeah.
I believe
He's
it
an
was.
amazing individual.
Yes.
Great story.
Cares about everybody that
Yeah.
he works with, works for, works, alongside. And, so we'll do the right thing.
Yeah,
We'll
or
help.
reach out to Chris.Myers, Myers, at successlending.com. Ladies and gentlemen, we're going to be back in the hot seat again next week. We're not leaving for a little while, so you're going to get a bunch of us coming up here in the next few weeks. And we're excited to be here. Hope you enjoyed the show today. Go out there and make it a great day. It's still a good market. Go get some clients and sell some real estate. We'll see you next week on Cliff's Notes. All right, folks, tune in to Cliff's Notes every Thursday at 1 o'clock Central for the tips, tricks, and tactics to explode your business. I guarantee it.